Hello everyone, welcome back to the Financial Drive. Today in this video we're going to talk about one of the most popular investment options, and you already read from the title, it's real estate. Real estate has long been a favorite among investors. Real estate investing can be a great way to build wealth, but like any investment, there are risks and rewards. In this video, we'll explore the advantages and disadvantages of investing in real estate as well as provide tips on how to get started. Whether you're a first-time investor or a seasoned pro, this video has something for everyone. I'll give a couple of examples in the end, so watch until the end. First, let's start the discussion with what are the advantages of investing in real estate. One of the most important things to know, and its biggest advantage, is its potential for long-term appreciation. Real estate has historically appreciated in value over time, meaning if you hold on to your property for a number of years, you may be able to sell it for a very good profit. Another advantage is cash flow. So once you have your property, if you decide to rent out, you can earn a steady stream of rental income each month. So this can now help you offset your mortgage payments and other expenses and can provide a source of passive income each month. Real estate is also a tangible asset, which means it has its own physical value. Unlike stocks and bonds, which are essentially pieces of paper, real estate is a physical asset that you can see and touch, meaning this can provide a sense of security and stability to investors. Finally, the one that I like, real estate can offer you tax benefits. For example, you may be able to deduct expenses such as mortgage interest, property taxes, and repairs from your taxable income. And of course, there has to be some disadvantages to investing in real estate. One of the biggest is high upfront cost. And this is likely the reason why most of you don't really invest in real estate. Unlike stocks and bonds, which can be purchased with a few $100,000, real estate typically requires significant amount of capital. And it can also be one of the most time-consuming investment. And if you decide to manage your own rental property, like most of us do, you'll need to be prepared to handle tenant complaints, repairs, and other issues. And this can be a lot of work, especially if you have multiple properties. Another potential downside is the lack of liquidity. Unlike stocks and bonds, which can be bought and sold in seconds, real estate is a relatively illiquid investment. Then, if you need to sell your property quickly, you may have a difficult time finding a buyer. Finally, real estate can be risky. Property values can fluctuate over time, and there is always the possibility of unexpected expenses such as major repairs or legal disputes with tenants. So now that we have discussed the pros and cons of investing in real estate, let's talk how to get started. First step is research. So before you invest in any property, you'll want to thoroughly research the local market. For each property and market, note down property values, rental rates, and vacancy rates. Next, you'll need to secure financing. If you don't have enough cash to purchase a property outright, you may need to take out a mortgage or other type of loan, which is commonly what people do. Be sure to shop around for the best rates and terms. Once you have found a property that meets your criteria and secured financing, it's time to make an offer. Be prepared to negotiate with the seller, and remember, you don't have to be afraid to walk away if the deal isn't right for you. Now let's take a look at an example of a successful real estate investment. Meet Ramesh and Suresh, two brothers who have been saving for years to buy the first home. They've always dreamt of owning a vacation home on the coast, but they didn't think they could even afford it. So one day, Suresh came across a beach house that needed some repairs, and the owner, he was really motivated to sell and was willing to accept a lower price in exchange for a quick sale. And that's when Ramesh and Suresh saw an opportunity and decided to take the plunge. After purchasing the property, Ramesh and Suresh spent several months renovating the beach house, doing much of the work themselves to save money. Once the renovations were completed, beach house was really looking good. They began renting out the property as a vacation home. And thanks to its prime location and stunning ocean views, the beach house quickly became popular among tourists. They were able to charge premium rental rates, and the property was occupied nearly every weekend throughout the summer season. Over the years, Ramesh and Suresh continued to make luxury improvements to the property, like adding amenities such as a hot tub and outdoor shower. They also raised their rental rates to keep up with the market and invested in marketing to add more guests. Eventually, Ramesh and Suresh decided to sell the property. They already made the passive income through the rentals, and thanks to the improvements that they had made and the strong rental history, they were able to sell the property for a significant profit. The income that they had earned from renting out the property had also helped them pay off their mortgage and save them for the future investments. Let me give you another example of someone who invested in real estate and faced some challenges. Geeta is a young professional who decided to invest in a rental property as a way to generate passive income. She did her research and found a property in a desirable location that she thought would be a great investment. At first, things went smoothly. Geeta was able to find tenants quickly and the rental income covered the mortgage and other expenses. Now comes a twist. However, a few years into the investment, the property values in the area began to decline due to an economic downturn. And as a result, Geeta's property was worth significantly less than what she had paid for it, and she was struggling to cover the expenses. To make matters worse, one of her tenants stopped paying rent, leaving her with a vacant unit and loss of income. Geeta found herself in a tough spot and she realized that she had underestimated the level of risk involved in a real estate investing. So, what's the verdict on investing in real estate? As Ramesh and Suresh's story illustrates, investing in real estate can be a great way to build wealth and generate passive income. Geeta's story shows otherwise. Both the stories clearly explains it's important to carefully consider the pros and cons of real estate investing before making any decisions. If you decide that real estate is right for you, be sure to do your own research, secure financing, and carefully evaluate any potential properties. Additionally, investors need to have a certain level of expertise and knowledge to make informed decisions and avoid costly mistakes. With patience, hard work, and a bit of luck, you can too achieve success in the world of real estate investing. Thank you for watching. If you found the video helpful, please like and share. And for more financial content, please subscribe to the Financial Drive. I'll see you in the next one. Until then, goodbye.